Why your mortgage payment can change even with a fixed rate loan. A lot of homeowners think their payment is fixed, and yeah, that sounds pretty straightforward. You get a fixed rate mortgage, your interest rate stays the same, so your payment should stay the same, right? Well, not always, and this is where a lot of homeowners get confused. Become because your mortgage payment can still go up or down even with a fixed rate. So let's break this down. This is general education information. It's not mortgage or financial advice. Your actual cost can be different depending on your loan and locations. First, what does fixed rate mean? A fixed rate mortgage usually means your interest rate doesn't change during the loan term. If you have a 30-year fixed rate mortgage, your interest rate stays fixed. That's the good part. But here's the thing, your total monthly housing payment can include more than principal and more than interest. That's where people get tripped it up. So what is in the payment? A typical mortgage payment can include several parts. There's a principal, there's interest, then there can be taxes and homeowners insurance. You may hear this called PT, principal, interest, taxes, and insurance. Your exact payment structure depends on your loan, but taxes and insurance are the important parts here. Let's talk about property taxes. Property taxes can change, and this is a big deal. A country or local government can reduce a property. The tax bill can change depending on local rules. So let's say your mortgage payment can look affordable. You buy the house, everything seems fine. Then later, your property tax will change. If your mortgage company collects tax through escrow, your monthly payments would change. Your interest rate didn't change. Your loan didn't suddenly become variable. The tax expense changed. And that's the part a lot of people miss. Now let's talk about insurance. Homeowner insurance can also affect your payments. Insurance premiums can change. That can happen for different reasons. Your location can matter, the property can matter, the insurance marker can matter. And in some US markets, homeowners are dealing with much higher insurance cost. So again, your interest rate can stay fixed, but your insurance cost can still change. Here's a simple example. Let's say your monthly principal and interest comes to $2,000. Then your taxes added another $300. Your insurance adds another $100. So your total payment comes to about $2,400. Now imagine your taxes increase. Add and your insurance premium also rises. Your principals and interest can still be exactly the same, but your total payment could become higher. That's not a rate change, it's a housing cost change. What is an escrow account? You may have heard the word escrow before. An escrow account can be used to collect money for certain home ownership expenses. Your mortgage survivor may collect these amounts, then use that money to pay certain bills, property taxes, and homeowners insurance. This can make payments easier because you don't have to handle those large bills yourself. But there is a catch. If those expenses change, your escrow payment can change, and that can change your total monthly mortgage payment. Here's another thing people miss. Escrow estimates can be wrong, not because someone is trying to make your payment wrong, it's just an estimate. The actual tax bill can end up being different. The insurance premium can also be different. When the survivor reviews escrow, the monthly payments may be adjustable. That's why you might see a notice about a new payment, and then you are thinking, wait, I have a fixed rate. Yes, you do, but fixed rate doesn't mean every housing cost will stay exactly the same. This matters when buying a home. A lot of buyers look at one number. They ask, what is the mortgage payment? But that's not always enough. You also want to understand property taxes. You want to understand homeowners insurance. You may need to consider HOA fees. And of course, there are maintenance costs. The real cost of owning a home is more than the loan payment alone. That's especially important today when housing costs remain high. What about HOA fees? Housing uh, maintenance. HOA fees are another separate cost, and they can change too. And HOA may increase its fees to pay for community expenses. There can be there can also be a special assumptions assessments in some communities. So even if your mortgage rate never changes, your overall housing budget can still change. That's why a smart buyers look beyond the mortgage rate. So what should buyers check before buying a home? Don't just ask about the rule rate. Ask about property taxes. Ask how taxes are calculated. Ask about homeowners insurance. Ask if the property has an HOA. Then check the HOA cost. Look at recent tax history. Look at insurance quotas and think about maintenance. Don't just ask, can I afford the mortgage? Ask a bigger question, can I afford the home? Those are not always the same picture. Here's the bigger picture. Mortgage rates get a lot of attention, and what's understandable. But homeowners' costs are bigger and the rate. Property taxes matter, insurance matters, maintenance matters, HOA cost and matter. Utilities matter too, and these costs can change over time. That's something buyers need to understand before closing. Why this is so important now? Housing affordability is still a major issue, and buyers are looking at every part of the budget. Mortgage rates remain elevated compared with the very low rates many borrowers saw years ago. At the same time, property insurance costs are becoming a bigger concern, and property taxes can also add significant costs. So, looking only at the purchase price can be mistake. One simple rule: before you buy a home, look at the full payment, not just principal, not just interest. Look at taxes, look at insurance, look at the HOA cost, look at the maintenance. Then ask yourself, would I still be comfortable if some of these costs rose? That's much better question. Final thoughts: a fixed rate mortgage can give you a stability. Your interest rate can stay the same, but your total housing cost can still change. Property taxes can change, insurance cost can change, HOA fees can change, and maintenance cost can definitely change. So don't let one number tell you the whole story. When you are looking at a home, look at the full cost. That's how you get a much better picture. Thanks for watching. Subscribe for more content.